Central Bank of Nigeria's Monetary Policy Committee retained interest rate benchmark at 27.50% at the 299th meeting. This decision marks a departure from the previous trend, signaling a period of observation and assessment as the economy navigates a complex landscape.
The committee was unanimous in its decision to hold all parameters and thus decided as follows. Retain the MPR at 27.50%. Retain the asymmetric corridor around the MPR at plus 500 to minus 100 basis points. Retain the cash reserve ratio of deposit money banks at 50% and merchant banks at 16%. Retain the liquidity ratio at 30%.
The latest MPC decision after the recent rebasing of the gross domestic product and consumer price index, which saw inflation fall from 34.80% to 24.48%, provides a new perspective on the cautious approach being taken.
The committee noted the recent rebasing of the Consumer Price Index, CPI, by the National Bureau of Statistics, NBS, which reviewed the weights of items in the consumption basket to reflect current consumption patterns.
With inflation having come down by 1,000 basis points, the natural expectation would have been that the NPR would have to reduce to drive growth, but we all know that inflation coming down to 24% is a result of rebasing, not because inflation itself has reduced. So the MPC decision at the moment is, I don't think they had any other option. I think the only thing they could do was hold, and then they would have to go back to the drawing board and determine how to respond to this rather unusual, if not unprecedented situation.
With this latest monetary decision, the coming months will be crucial in determining whether the CBN's cautious approach is the right one, if other adjustments will be made, if the financial and business markets will improve, and ultimately, if Nigerians will feel the impact. In Lagos for News Central, Lekan Onabanjo.